we had some very important market opinion coming from Neelkanth Mishra of Credit Suisse. In the first place, he thinks the earnings season turns in 2017 and therefore past December, when the third quarter numbers will be awaited, he expects a fairly big rally in the next 12 months as that earnings improvement gets factored in. But I think we're going to play out more the parts where he gave us his interesting sectoral picks.
I quite agree with the statement in the sentence in the monetary policy statement yesterday that the decline that we've seen in food inflation is not just because of base effects, and that this is a structural change in momentum, and I fully agree with that. It does create challenges for policymakers in terms of what to do with the surplus manpower in agriculture. Agricultural productivity is starting to rise very sharply, which is a good thing, but it creates other set of problems. So this creates the room for the RBI or interest rates to start coming down. So I was surprised that the rate cuts happened in October, but I think there is room emerging, and we can see meaningful cuts in the next 12 months. For the first time in my experience as a strategist, gone overweight construction. So we think that labor, and I also think that so the low inflation and low rates, and we also think that unskilled labor wage growth will also remain subdued, which again is a challenge for the government. We've also raised our rates on some of the more corporate-focused private banks, and this we have funded by cutting staples to neutral. So we had an overweight all the time that I've been a strategist. For the longest time, and for the first time we have cut our overweight on staples to neutral. We have also gone deeper underweight on IT and pharmaceuticals.
Okay, some